So every business under the sun will require you to have a strategy. It might be a sales, it might be a marketing strategy, but whatever situation that you come across, you require a strategy to attack that particular situation. Likewise, in trading, you need to have a strategy for every particular situation that you come across. Sometimes the market consolidates, sometimes it trends, sometimes it makes very deep pullbacks, and if you do not have a plan for that scenario, you'll be trapped. So basically, a lot of traders would love to have a large frequency, meaning that they do not want to stay or to have a lot of patience whilst waiting for a trade. This particular strategy that I'll share with you in this video will actually give you a significant amount of trades so that you do not need to wait a long period of time to get an entry. So what you need to do is to watch this video from the start up to the end as I'll break down step by step on this particular strategy. Without further ado, let's jump right into the lecture. So like what I said earlier before, every business requires an operation strategy. It might be marketing, it might be sales, it might be any type of event or operation that is required. You need to have a strategy for that. When you have late payments from customers or when supplies delay on supply, you need a strategy on how to navigate that particular scenario. So the same applies in Forex business. You need a strategy for every different scenario that you come across. In this video, I'll give you a strategy that you can apply in a sharp, fast-moving trend of the market. Basically, a hybrid flow of the market, whereby the market is actually chopping, is actually trending, but not giving you enough huge pullbacks for you to get a proper market entry. But before we go into this video, I need to highlight that not any strategy under the sun will give you 100% accuracy. And when we say it's 65% accurate, it means you have some certain number of trades that you need to take for you to get that particular 65%. You don't just take 5 trades and say, out of those 5 trades, I need to see 65% of them being winners. All right, so firstly, we always start by analysis. Always, whenever we are approaching the market, the first step is to analyze. Like any other strategy, we'll always start by market trend analysis. Where is the market going, to the upside or to the downside? We need to put period separators on our charts so that we see the demarcated market in days on the M15 time frame. So basically, in this particular case, I've actually highlighted that we are going to be viewing this market on the M15 time frame. There is not much analysis that will be done except looking for this particular model. So it's a model that will be trying to fit in whatever the market is trying to present to us, and when the model is fit, we actually can take that particular trade. Whilst on that note, if you are new to this channel, please click the subscribe button so that you won't miss any of the videos as I upload. So this is the model that we'll be looking at. It's basically a model whereby we need to see 3 days. It's basically 3 days that will be fitting in this particular model. Day 1, we need to get a trend. Basically, day 1 is to give us whether the market is going to the downside or is going to the upside. And when that happens, the following day must be a day of consolidation, which is defined by the opening price of that day being almost equal to the closing price of that particular day. It's almost equal, not equal, because we will not have an equal price clearly. Of course, it might happen, but we are looking for almost equal opening and closing prices to call a particular day a day of consolidation. This should be the second day from the day of trend. So it's basically a day of trend, a day of consolidation. Then the third day must be a day whereby the market will come back to retest this particular high of the previous day of consolidation. When that happens, we get a candlestick reversal pattern at this particular point, we enter the market. So basically, this particular strategy or this particular model can be applied to indices like US100 or US30. You can as well apply it to cryptocurrencies, but they are a bit slow to fit in this particular model. So here's a chart example of everything that I've just talked about. We can see that this was day 1, whereby we had a drop, and these blue traces are basically marking the high and lows of a day. You can actually request for a template that can provide you this particular indicator for free. Just say hi on Telegram, I'll provide you. Day 1, we had a trend. Day 2, we can see the opening price, which is here, and the closing price, which is here, are almost equal, meaning that day 2 was actually a day of consolidation. This was actually on US100 on the 4th of September 2024. You can check the real charts to actually see this model being fit within the flow of the market. Then on the high of the day, which was this one, that is where we were waiting to see the market come to retest. You can see from the Asian session right up to the US session, that is when we had this particular retest of the high of the yesterday's flow. Then the market actually gave us a beautiful flow to the downside like that. So let's now jump over the charts for more examples. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. Become part of our community so that you can find more of what we do. All right, so this is US100, which we are going to use for illustration. We've said we need to fit our model whereby we have a trend, a chop, and then a trend. In this case, we can see there was a drop of the market. After that drop of the market, we can see there was a consolidation whereby the opening price, which was this one, and the closing price were almost similar, meaning that this was a consolidation day. And then we can see the market actually came to retest high of yesterday, which is this one, this blue tracer, and the market gave us a beautiful drop to the downside. When it happens, or when the model is fulfilled, it has a very high probability of occurrence. You'd find out that your accuracy rate will actually rise, but we are looking at 65 to 75% of the time, meaning that out of 50 trades, you'll be able to calculate a proper accuracy rate. In this case, this is the same example that we've seen on the slides, whereby we had day of drop as day 1, consolidation, and then retest of yesterday's high, and the market went to the downside beautifully like that. In this case, we can see as well we had a rise to give us trend. Day 1 rise, day 2 day of consolidation, then day 3 retest of yesterday's low, which occurred at this particular point, and then a beautiful rise like that. This one, day 1, was this a day of consolidation? No. But was this a day of consolidation? Yes. Opening almost equal to closing, and then we were expecting to see a retest of yesterday's low, which occurred at this particular point. Of course, this might have been a losing trade, because when they came to the yesterday's low, we could have made an entry at this particular point, because this is how the market looked like. But then they later went to the downside. Of course, on US100, we won't like to use wide stops. So this, of course, went to the upside, but we will actually take it as a loser or a trade that did not move as we anticipate. Right? We had a rise day 1, day 2, consolidation, opening and closing almost equal, but unfortunately, we did not pin this low. But on this day, we also had a day of consolidation, opening and closing at almost equal prices, and then a pin on yesterday's low like that, and the market went to the upside basically like that. Clean. So what you need to do is to be able to use this particular strategy in this particular scenario, whereby you've seen that the model can fit and you can actually navigate the market using this particular entry model. So whilst on that note, please always remember that these strategies are not 100%. You must not expect to be a winner in each and every trade. You must always understand that all trading strategies under the sun works on a probability, and you can have a losing streak initially, but if you keep on putting more entries, you'll definitely find the rightful entry that will make you money. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.